Okay, very good morning. It's Tuesday the 12th of September. It's getting the briefing underway, and to get you up to speed with what happened last night at the close on Wall Street, some of the news that's occurred, obviously a late night vote in Parliament in the UK in regards to the EU withdrawal bill, which we'll look at as well in a bit more detail. But starting off with US equities, and the S&P 500 last night, all-time high. Once again, in fact, it rose the most in a single session. It was the biggest move since April. The stock 600, if you were looking at how Europe performed, that was up 1.04%, the best day since mid-August. Nasdaq Dow also not too far from closing at best levels ever. And so yesterday was really defined by sentiment rather than anything calendar related, because there wasn't really a great deal out in terms of this week from an economic data point of view. Certainly it's going to be based around the second half of the week. You've got US CPI, which will be very important for Fed policy expectations. That will come on Thursday. US retail sales on Friday. You've also got things like the Bank of England, the SNB, all coming on Thursday as well. So quite a lot second half this week. So yesterday was really a kind of sigh of relief from the lack of missile testing coming out of North Korea, of which the middle of last week that they said they were going to do on Saturday. That did not materialize. That coupled then with a slight deviation of the course of Hurricane Irma, missing the eastern coast of Florida, which is obviously where, on the southernmost tip where Miami is situated, meant that actually from an insurer's point of view, the worst case scenario, which was hitting their shares heavily at the end of last week, was also not materialized, and so their shares rallied quite sharply yesterday, helping then create this kind of risk-on sentiment on the back of a relief that, well, although these things aren't exactly great, it could have been a lot worse. And so all-time highs S&P, equity markets then feeding through into the Asia-Pacific session, a weaker Japanese yen. Gold obviously moved lower yesterday, and we're down about $4 again this morning, having found a little bit of support in the Asian session at the S1 level on the pivots. But the weaker yen obviously assisting the export names, so helping lift the Nikkei 225 as well. But just getting into the thick of it then, let's have a look at some of the news that's come out, because just looking at these charts this morning, obviously the S&P, I think I just wanted to put into a little bit of context, having hit those all-time highs for the close yesterday, because really there's been a couple of distinct gap lowers that we've had kind of in succession at the beginning of each week, and this week's the first time in 3 that we haven't had that really happen because of the lack of action from North Korea. If you think about it, the reason why the relief maybe was so sharp and acute yesterday was because the fact that 2 weeks ago, this is when you had North Korea fire that ballistic missile that crossed for the first time in a long time Japanese territory, having flown over that northern island of Hokkaido and falling in the Pacific Ocean. That's what caused that first kind of drop in the US equity market, the resumption of trade on that week. And then obviously that got followed up with the 6th nuclear test that they conducted, that was 5-6 times larger than Hiroshima, and yet here we are a week later, all-time highs. And so certainly the situation hasn't gone away. We're going to talk about Korea a little bit more, because there was the UN latest sanctions got approved yesterday, and certainly Korea's response will be something which the market will be eagerly awaiting to see how aggressive will their rhetoric be. Nothing really heard from them as yet, and so all clear at the moment on the Western Front, you would say. Looking at the European equities, obviously have followed suit. The DAX, Euro stocks this morning, just carrying the kind of baton, if you like, over from that positive close on Wall Street in the Asia Pacific session. So as I said, The yen remains a touch weaker, as too does gold. And fixed income then on the back foot. The US 10 years down about 5 ticks this morning. Consequently, bunds also down about 26 ticks. Just keeping an eye on S2 here, downside, around this 62.50 level. In the currency markets, though, one of the first news items to have a talk about is the Great British Pound. So cable above R1 this morning, having surmounted the 132 handle again, and outperforming a little bit its European counterpart in the currency market. And so one of the main things we had last night, and I wanted to just go into in a bit more detail to provide hopefully a little bit of clarity on the situation, is this House of Commons vote which occurred late last night. So it was gone midnight by the time they actually got down to the final vote. And MPs voted by a majority of 36, so 326 to 290, a majority in favour then to move the EU withdrawal bill onto the next stage of parliamentary scrutiny. There was a series of different votes that did occur. That was kind of, let's call it the headline vote, so to speak. The closest vote was 318 to 301. That was on the government's planned timetable for considering the legislation. That actually, I believe, is 8 days, which to me sounds incredibly tight in order to, as we're going to discuss in a second here, to debate the line-by-line legislation via the committee stage of the process. 8 days seems extremely tight, and so likelihood, I would imagine, this will create some ongoing uncertainty when we get to that point. Looking at specifically then, what is this? What is going on at the moment? Because this isn't by any means the fact that the vote went through fairly comfortably last night. Does it mean we've heard the end of this? This is only really, we're coming to the middle of the process, so to speak, of this particular legislation. So ministers, they presented the legislation as a technical tidying up that is vital to ensure that the UK's various statute books still make sense after the country leaves, basically when the expiration of Article 50 happens in March 2019. So this is kind of a technicality of legal or of country law to safeguard then enough time then in the future, upon that expiration, everything is kind of set in place. Legislation, though, has been heavily criticised for its introduction of this Henry VIII power for ministers to modify legislation with only minimal parliamentary scrutiny. And obviously this being to the disdain of the opposition parties, given the fact that such is the way in which law is debated in the UK system, that it gives the right then for Parliament as a whole to give it the backing. Whereas what this essentially does, this Henry VIII power, it gives the government more power for their own ministers to modify legislation without going through the kind of more traditional channels, so to speak. So hence the reason why it comes up against some opposition. One of the key considerations here is that a rebellion by as few as 7 Conservative MPs could lead to a defeat for the government and obviously its allies in Northern Ireland, the DUP, if all the opposition parties vote unanimously against the legislation. So going forward, again, this is the whole problem with the backfiring of the lacklustre performance of the Conservatives during the June general election, is that it's such a tight call, the control that they have. Not only are they dependent on the DUP backing them, but a rebellion by as few as 7 Conservative MPs could be trouble in terms of complication to this process. Net, how I would kind of summarise this situation is any disruption to the process just adds time to the discussion, which then removes away from the country dealing with the more important matters at hand, which is talking to Europe and securing this transitional deal and then eventually the ongoing trade talks. So as such, the fact that this has gone through at this point without many issues, sterling's had a little bit of a move on the upside this morning, and hence maybe some of the slight outperformance. One important thing though here to recognise is the procedure of which a bill starting in the House of Commons must go through in order to become royal assent. And so what we've had here, essentially, looking at this infographic from the UK parliamentary website, you've had your first reading, and last night what we had was the second reading, which now means that we move on to this C stage here in the middle of the House of Commons procedures, the committee stage. Now the committee stage is where detailed examination of the bill takes place. It usually starts within a couple of weeks of the bill's second reading, although it's not guaranteed. As far as I've read this morning, was that what they're essentially going to do is let the various political parties hold their annual kind of meetings, if you like. So the Labour conference, which is happening on the 24th to the 27th of September, so end of the month. And then of course you've got the Conservative Party conference happening between the 1st and 4th of October. And so once those are out of the way, then this kind of 8-day debate will get underway for the committee stage. The problem being is that this is exactly, as it says here, a detailed examination of the bill. So we move away from this kind of more holistic approach of an idea of what the withdrawal process is, to then going through specific legislation, which you would imagine is when the problems, or we might encounter problems here with people being unhappy about specific points of the legality surrounding the situation. And so from here, don't forget what happens after the committee stage. Well, if the bill has been amended, the bill is reprinted before its next stage. Once committee stage is finished, the bill returns to the floor of the House of Commons for its report stage, where the amended bill can be debated and further amendments proposed. So still a long way to go is the kind of the summary of this. And so although you might have a bit of short-term reprieve in the pound back to the 130 handle and this R1 this morning, it's likely going to be distinctly short-lived, I feel, because of the importance of data coming out later this morning. And that data is, of course, UK inflation. So while we're on the subject of that, just having a quick look at the importance of this measure is because when we were talking about Q2 really of this year, we saw quite a substantial repricing of people's expectations upon the Bank of England, not through choice but through being pushed by rising prices, to have to then move toward more hawkish with the threat of an interest rate hike to counter rising inflation, which was moving at that point what looked like further and further away from, of course, the Bank of England's target of 2%. We got all the way up to 2.9, in fact, in the month of May, which was then when we started to hear some of the most hawkish vote splits amongst the Monetary Policy Committee, the MPC, when we had 5-3. That was when we had Christine Forbes, Michael Saunders, Ian McCafferty all voting for an immediate rate hike. Obviously the team has changed. Christine Forbes is no longer there, and so the median consensus is, when the Bank of England deliver their interest rate decision later on this week on Thursday, is that we kind of revert back to the classic kind of split, if you like. So 7-2 would be in that instance. Ian McCafferty, Michael Saunders, most analysts foresee them still sticking to their guns. That likely to be the case for them to maintain their credibility, and with inflation still at this point sitting at the levels where it is, still 0.6 away from target. What could sway that decision? Well, the numbers coming out in about 45 minutes definitely could, if they were out of line enough. Now, let me just quickly switch over to the calendar and have a look. CPI is expected. Actually, the median expectation today is CPI at 2.8%. So actually, after that slight drop-off that we've had and a consistent 2.6, we're looking at a move back in towards the highest levels that we were at back in May. Now, if that were the case, this only validates then the argument for Saunders and McCafferty to remain of the case of an immediate rate hike. Would that force, do you think, the other members of the MPC to follow them? I think not. Because if you look at the actual economic situation overall, the assessment would be that economic conditions remain extremely fragile and wages continue to remain fairly benign comparative to price pressures. And so therefore, if anything, I think if those MPC members weren't convinced when we were printing at 2.7, 2.9, I don't think they're going to be convinced to change their mind so quickly when we get to 2.8, if that was the case. Now, if inflation was to print up at 3% today, so let's say it jumps by 0.4, that certainly makes things more interesting. Now, on the balance, I still don't think that the Bank of England would make any type of drastic decision come this week, but certainly the verbal intervention, if you like, to threat of rising interest rates in order to kind of guide market expectations that it's a credible threat that they would take action, could be enough to try and, as a first tactic, to bring down the pound a little bit, if you like, or bring down at least the prospect of an interest rate hike is a credible one. Looking on the other side of things, obviously a lower number would be, I think, a bit of a surprise, because if you think about August as a seasonal month, you know, what happens in August? Well, August is the kind of holiday season. And so if you think about it, London is one of the world's most busiest holiday destinations. So what do airliners do with their airfare tickets? Prices go up. What do hotels do for booking a night's stay? Prices go up. Restaurant prices might change. You know, all these things typically would lend their hand to a higher inflation print in the month of August on a seasonal basis. Hence, probably the reason why you're looking at a 2.8% increase from 2.6. If then we did get a high number, this is another consideration here, would people say, well, it was because of August? Let's see what September, which is a more truer reading, if you like, where it's not artificially inflated for those aforementioned reasons. All the more reason then for the Bank of England not to do anything this week. But certainly trading the pound will be an opportunity, I'm sure, later, because this data is important, so it will have an underlying impact on the pound. And if we're looking at cable futures here, there's certainly a double top from the last 2 days, so we're looking really from the end of last week and yesterday's session. 132.26 will be a level to keep an eye on. Obviously, if we start breaking above these levels, you can see here the bigger overall target is in the beginning of August. We printed up here at 132.87. Any breach of that then starts to open up the more broader run to 133, 134 and above, which will then be the kind of more months thereafter which prove the resistance post the initial EU referendum which took place last summer. So there's some quite key upside resistance levels are in sight here in cable. So if we did get a short-term fast money move, it'd be worth considering those levels. So you got the yesterday's, last week's kind of double top above here. Then if we go above R2, those levels going back to the beginning of the month to keep an eye on. So that's your kind of sterling story at the moment. So I would kind of forget about the Brexit bill for this morning, because you had the little run up, those early UK European traders stepping in the market, just buying into that result amid a little bit of dollar weakness as well. However, attention now will be firmly on that inflation print coming up in the next 40 minutes or so. Okay, the other thing I wanted to talk about just quickly was North Korea. So obviously relief yesterday on the back of them not testing a missile at the weekend. Now this is the latest, and actually I think short term this might prove to be also quite a positive development, because essentially the UN has approved new North Korean sanctions, but they've stopped short of oil embargo. So let me just have a look at the details here. The resolution seeks to cut imports of refined petroleum products to 2 million barrels a year, a ban on textile exports, and strengthen inspections on ships that are believed to be carrying cargo in breach of sanctions. However, this was one of the important things. The US dropped a bid to ban all oil imports and freeze Kim's assets. And so essentially what happened here was that the US brought forward a very strict set of sanctions. However, it basically didn't get the type of backing required from the likes of two countries. You can probably guess who: China and Russia. And as such, then they came to a concession was made and a compromise. And so what the UN has done is, yes, they've increased sanctions on North Korea, but they're certainly not as stringent as maybe the US had wanted. And possibly then this might appease the Chinese and also the North Koreans, I feel, in the short term, that they've managed to get a not quite as bad deal as could have been the case. Kind of like what we were talking about with the general relief rally yesterday. That's the latest on North Korea. Okay, a quick look at the calendar then, just to wrap things off. I can see there's a couple of questions that the new guys have in the chat room, so I'll address those when I'm done. But other than the UK CPI data coming up at 9:30, a few other things to have a look at. Really for the morning it's pretty quiet once that data passes. And for the US session, likewise, there's not a great deal coming out. There's the job opening number at 3 o'clock. The API crude oil inventories, as per usual, they'll be coming out later on this evening. You'd also have the Vice President of the ECB, Victor Constancio, providing concluding remarks at a monetary policy in non-standard times topic speech in Frankfurt, Germany. So that actually could be quite interesting. That's going to be at 2:45, so shortly after the open on Wall Street. So I definitely would take that under consideration if you're going to be in any open positions at that time. And that's pretty much it. So going to leave it at that. I wish you a good trading day ahead. As I said, any questions, feel free to contact me in the chat room. Thank you very much.